We see bigger players starting to take a look at Bitcoin. We get more and more news from pension funds, state funds in the US that start allocating into Bitcoin. We expect higher prices, but we do believe until end of the year it will be close to 140K. Another big news that we had I think last week or the week before, was obviously that President Trump, he signed an executive order allowing 401ks to allocate into crypto and including Bitcoin. And obviously that will be a massive demand driver for the years to come.
Bitcoin is tightening its grip as digital gold, while Ethereum quietly cements itself as the backbone of tomorrow's financial system. Adrian Fritz, global head of research at 21 Shares, highlights that Bitcoin's trajectory is increasingly defined by powerful supply and demand forces. Trading just above $111,000, Bitcoin has shown resilience following August's volatility, with brave new coin data reflecting a 0.8% daily gain as of September 7, 2025. Fritz underscores that macroeconomic conditions remain pivotal. Expectations of falling interest rates could push investors higher on the risk curve, positioning Bitcoin as a prime beneficiary despite its dual perception as both a risk-off and risk-on asset. He identifies the surge in ETF adoption as a major catalyst, noting that Bitcoin ETFs remain the most successful in history, drawing consistent inflows and opening doors to institutional investors. Another layer of demand is being driven by corporations emulating MicroStrategy's playbook, adding Bitcoin to their treasuries as a hedge and long-term growth bet. On-chain data further reveals that around 14 million Bitcoin have not moved in 6 months, underscoring strong holding behavior amid an annual issuance of just 165,000 coins. With institutional adoption still in its early stages ranging from pension funds to 401k allocations, this tightening supply and growing demand suggest Bitcoin is at the very start of a transformative adoption curve. This is only the opening chapter of crypto's evolution. The most transformative shifts are still ahead. Stay connected, subscribe, and turn on notifications to follow every major move in Bitcoin, Ethereum, and global finance.
I mean, there's a lot going on, and it's pretty exciting supply and demand dynamics when it comes to Bitcoin. First of all, of course, macro is important, so we have to take it into account. We all expect interest rates to come down in the near future, and of course, that will fuel investors to go a bit higher on the risk curve. While Bitcoin obviously has characteristics of a risk-off asset, a lot of investors still treat it as a risk-on play. However, given that the macro outlook looks positive, that's one catalyst. Secondly, as you said, obviously it is the ETFs. It is a gateway for institutional adoption, and Bitcoin over the last 1.5 years since beginning last year showcased that there is a lot of interest, and it was the most successful ETF launch in history, and it continues to see inflows. Moreover, and that's really important as well, obviously our Bitcoin treasury companies that have been popping up globally, they kind of take the MicroStrategy playbook and they adding Bitcoin to their treasury. And as we can see, that's another factor that, just drives up the demand for Bitcoin. Lastly, and that's where we talk about the supply shock, if we look at long-term holders, or let's say people that haven't moved their Bitcoin for the last 6 months, if we look at on-chain metrics, that's actually around 14 million Bitcoin haven't moved in the last 6 months. And that kind of showcases that a lot of people, especially retail as well, they are buying and they are holding on to the asset, which is really, really important. And of course, if we compare the numbers, let's not forget Bitcoin is a hard-coded asset. Only 165,000 Bitcoin are coming new into the supply on a yearly basis. And if we compare that to actually what's been happening over the last 12 months, that greatly exceeds the actual supply that is out there. And that kind of is that cocktail for a potential supply shock. We don't think so. I mean, this is basically just the beginning. Also in regards to institutional adoption, we see bigger players starting to take a look at Bitcoin. Of course, we get more and more news from pension funds or state funds in the US that start allocating into Bitcoin, but we're still at the very, very beginning. Another big news that we had I think last week or the week before, was obviously that President Trump, he signed an executive order allowing 401ks to allocate into crypto and including Bitcoin. And obviously that will be a massive demand driver for the years to come. When it comes to the inflows, of course, the US is a different beast. The US is the biggest capital market in the world. So just to put some numbers, it took us over 5 years to reach around 3 billion in Europe, while in the US it took us 3 months. And that's just kind of like the magnitude of the market.
Ethereum is evolving from a stagnant asset into the trusted backbone of global finance, driven by institutional adoption, stablecoin dominance, and its unmatched track record of security. Adrian Fritz notes that one of Ethereum's greatest challenges has been managing expectations. After Bitcoin ETFs recorded the most successful launch in history, it was inevitable that Ethereum's debut would draw comparisons, though inflows were never expected to match the same scale. Over the past 12 to 18 months, Ethereum has faced stiff competition from rivals like Solana, while its price performance has remained relatively stagnant for 4 years. Fritz attributes this slowdown to both structural hurdles within Ethereum's technology and a narrative gap where Bitcoin's digital gold story is easy to grasp. Ethereum's value proposition requires deeper education. Regulatory changes, however, are reshaping the landscape. Pro-crypto policies in the US, such as the Genius Act, have reignited institutional interest in Ethereum. Despite being slower and more expensive than some competitors, Ethereum's decade-long uptime, reliability, and security make it the foundation of Wall Street's tokenization and stablecoin strategies. By August 2025, Ethereum secured 50% of the stablecoin market, hosting $67 billion in USDT and $35 billion in USDC. No longer a speculative play, Ethereum is establishing itself as the settlement layer powering global financial infrastructure. Let's get back to interview.
I think the first problem was just expectations. I think it's hard to compete with the biggest ETF launch in history. So even from our side, from 21 Shares, we didn't expect the same magnitude of inflows when it comes to Ethereum. However, just looking at the price performance of the last 12, 18 months, Ethereum was the problem child, right? We had other assets like Solana, for instance, eating up a lot of that market share, while Ethereum basically has been going sideways for the last 4 years. Why? I would say they had some structural problems, just when we talk about the technology itself. But I think the bigger problem was just the narrative. Of course, Bitcoin as a digital gold, as an emerging store of value, it's very easy to grasp. It's an easy pitch to make. While when it comes to Ethereum, it takes a bit more education until you really understand what the value proposition is. That's number one. Number two, I think it's also the regulatory changes again. What we've seen with the Genius Act, a clear move into stable coins, but also just the entire pro-crypto government in the US obviously sparked kind of like a rush back to Ethereum. Why Ethereum? It has the longest track record. Ethereum is 10 years old. It's never been down. Yes, it might be a bit slower than other blockchains. It might be a bit more expensive. But when it comes to Wall Street money, to big asset managers, to tokenization, stable coins, obviously they use Ethereum for that case, because security is the most important thing. And I'm happy Wall Street is finally catching up to that narrative. We provide access and we provide the tools for investors to get exposure. On top of that, obviously, we provide the education and the teach-ins for them to understand it. When it comes to the actual investment, obviously, they have to decide if they want to go in or not. How the decision process looks like, It really depends. Of course, there is client demand, so just the market wants to get exposure, which a lot of times we do see. Maybe internally we have a high conviction, and therefore we want to make sure we push a certain product, or any other partnership that might lead us to launching an ETF. But after all, we're an ETF provider, and we want to make sure we provide the tools for institutional investors. We put out a lot of written content for people to educate themselves. However, we also provide a lot of teach-ins, educational sessions, and I think where we excel is really speaking the language of the traditional investors, because especially when it comes to crypto, it can be highly technical. There's a lot of lingo and a lot of crypto specific terms, but we make sure we translate that into digestible bites and help you on that journey. So whenever you feel lost, feel free to reach out to 21 Shares at any time, I would say. One big misconception that is still around is that it's too volatile. Bitcoin's volatility came down significantly. It's around 50% maybe. A lot of times it's less volatile than most of the tech stocks. It's just really important to look at the quantitative analysis and how to fit it in a portfolio. But saying that this asset is too volatile, I think that's a major misconception.
Bitcoin's climb back toward $112,000 reflects not only resilience after recent volatility but also the accelerating influence of institutional adoption, corporate treasury strategies, and tightening supply dynamics. At the same time, Ethereum has emerged as the foundation for tokenization and stablecoin markets, offering the reliability and security demanded by Wall Street. Together, these two assets are reshaping global finance, Bitcoin as the premier store of value and Ethereum as the settlement layer for digital innovation. Their combined momentum signals a structural shift in markets, where traditional finance and blockchain technology converge to build the pillars of a new financial era. Could Bitcoin's tightening supply and Ethereum's dominance in tokenization mark the beginning of a new financial era where crypto becomes the foundation of global markets? Crypto is rewriting the rules of finance, but success belongs to those who stay disciplined and focused on fundamentals. Thanks for tuning in. Remember to like, share, and subscribe for more clear-cut crypto insights.